We're at the end of the greatest debt bubble, and we've never seen two bubbles in a row. That's another unique thing. Two real estate bubbles and two stock bubbles, and this time the stock and real estate bubbles are kind of occurring together. So that's a trip. I tell people, in real estate, look at the stock market, because the stock market tends to be the more leading indicator for the economy, and then housing tends to follow. And the difference, if you look back at the last downturn where stocks peaked in late 2007, real estate started peaking before, but real estate didn't bottom until mid 2012 when stocks bottomed in early 2009. So when you see the stock market start to fall, that's when you start to say, okay, I don't have long to sell my house if I'm looking at selling, because this real estate bubble is the second in a row, never happened before. By the way, even the roaring 20s, there really wasn't much of a real estate bubble because loans were hard to get back then. In the roaring 20s, a mortgage loan was 50% down in 5-year terms. You have to pay off the whole loan in 5 years. So the stocks got speculated in and got bid up. Real estate just had a normal kind of boom and bust. It only went down 26% in the Great Depression. Stocks went down 89% in the Great Depression. So that's what's different this time. Real estate really is even more so the heart of this bubble. And financing, since the kind of the 80s forward, and particularly the mid 90s forward, financing has been so easy, and interest rates keep getting pushed down by the Fed and falling inflation. And that was all because of the baby boom. So this really has been the most global and the biggest real estate bubble in all of history. In fact, I'm telling people, I don't think we'll ever see one this big again, and we haven't seen one this big previous, even going back to the 1800s or something. This is a big deal. Normally people say, hey, it's my house. I'm going to be in it forever. Okay, well, yeah. If you're thinking of trading up, don't do it now. Stay in your smaller home and wait. If you're thinking of selling and maybe retiring and downsizing a few years from now because you're an aging baby boomer, well, sell your big house now and wait a few years to see if this crash sets in, which I think is very, very, very likely to buy. So real estate's the biggest purchase we make. And again, never before a bubble like this because of such easy financing for housing mortgages. And I'm telling you, the people who I feel most sorry for in the world are the Chinese. Chinese have incomes more like 12 to 15,000 in US dollar equivalents. And the typical Chinese household is buying one little house and then buying one or two more and leaving it empty, not even renting it out, because they think real estate is the road to wealth. So as bad as our bubble may be the biggest we've ever had in the US and bigger than the one that peaked in 2006 and crashed 34% on average in the US, this bubble will be bigger here, but the Chinese are going to see the real estate bubble burst of all times. And that is going to take that economy down in a way nobody expects. And China will never fully come back because they're the only emerging country that has seen a peak in demographics. That, in other words, their population is aging like the developed countries, even though they're an emerging country with lower incomes and they have some urbanization left. But I'm telling you, the real estate bust in China is going to go down in history and going to make us feel good about, a home price is going down 50 to 60% here. Now, real quick, I was previously warning, hey, the last one was 34% on average. That means upscale homes were going down 50% or so. And again, nobody ever thought, I was told all growing up, real estate's the one thing that never goes down. They ain't making more of it and stuff. Well, that proved that wrong. But this bubble has gone much longer, much higher. I'm looking at just getting back to the mid 2012 lows, not that far ago. And that is about a 60% drop for the average house. And of course, that could mean 70, 80% or more for high-end homes and condos. And one of the funniest things I get every time I give a presentation, usually some older lady will come up to me and say, Harry, let me tell you about my house in La Jolla. It's on the cliff. It's the greatest house. It's got this and that. Certainly, Harry, my house isn't going to go down. And I'm like, Martha, I'm sorry. The bigger the bubble, the bigger the burst. The best houses are going to bubble the most in a market like this and go down the most. And they'll still be the best houses. And that's exactly what I want to buy on the other side a few years from now. The best houses, in other words, somebody may be looking at a 3,000 square foot house today to trade up into, and then we come out of this, you may be able to buy a 4,000 to 5,000 square foot house for less than the 3,000 square foot is today. And so this is going to be what I call the last great buy opportunity in real estate. We did get one in 2012 and shortly after that. And otherwise, you'd have to buy back in the early 80s in the deepest recession back then. So this is a huge threat to what is the biggest asset for most households. Most people own more real estate than they do stocks. Only the richest people have a large amount of stock. The biggest threat to your net worth, but also the greatest buy opportunity just a few years from now, if you'll be patient and if you'll sell any unnecessary real estate. Let's say you have a nice home you're living in and you got a vacation home and maybe you're considering retiring in that vacation home. Okay, it'd be best if you could sell the most valuable house and the one with the most equity in it now and raise as much cash so then you can have the most to buy real estate at the buy opportunity of a lifetime years from now. And then the other good thing about real estate is that real estate does take longer to bottom. So there's going to be a longer opportune buying opportunity here. Last time it was like 2009 to 2012 where you could have still bought them near the bottom. So I think this one you'll be able to start buying houses maybe in 2006 at great bargains, and that may extend out to 2008 or longer. So people should really be looking at real estate, vacation, investment, main homes, everything, retirement, and say, what do I really want? And then be waiting to pounce, knowing this is going to happen and build up all the capital you can now. And some people will come to me in my presentation and say, oh, hey, I got this house with a big mortgage on it. My second house doesn't have much. Oh, I should sell the one with the mortgage. I'm like, no, keep the one with the mortgage. The banks may have to write that down for you if it goes down enough. You may get a freebie there. Sell the one with the most equity. Almost everybody gets that one wrong. They think they should keep the one with the most equity and sell the one with the most debt. No, keep the one with the most debt. If things get as bad as I say, a 50% or more drop in real estate, banks are going to have to renegotiate loans with people, and you may get that high mortgage house written down. So you sell the house, create the house you own the most of, get a big pile of cash, and then maybe get your mortgage written down a few years from now with the government helping to subsidize banks do that. And I think they'll have to do that. And you just win across the board. Real estate, again, because of government pushing real interest rates lower and these zero rates, which even now Powell said recently, we may never see these zero rates again. I think they're going to be low long term, but you're right, zero rates because they push them to low. This is the number one thing to create a housing bubble and the reason why we had what I call a second artificial housing bubble to follow the natural one into 2006. That was the greatest boom in history, which I alone started forecasting in the early mid 80s. I said, people, this is not a recovery from the long 70s recession. This is the greatest boom in history with the largest generation ever. And we're going to see a boom into 2007 that's going to last longer and go higher in stocks and real estate. And people thought I was crazier back then than they think I am now when I'm bearish, okay? And people call me now a perma bear. This is one of the few times I've been bearish in my whole forecasting life, but that's what people do. There's never been a time where it was so easy to finance real estate. And again, for the Chinese on such low income, there compared to here. Imagine buying 2 or 3 small homes and you make $15,000 a year. That's what the typical Chinese person is. And a lot of those people have a second or third home empty, not even renting out. So this is a once in history sort of event. Stocks, since they were created in the late 1700s, have always bubbled and burst, and the rich have always driven them much more than anything else. But almost 60-70% of households buy real estate. 60-70% of people don't have anything significant in stocks and other financial assets, but they buy real estate. And so when the Fed, what they did, particularly as you said, it was COVID that really blew the top off, because COVID hit, and I'm the only guy talking about it, since the 2008-9 downturn, when they really started stimulating $27 trillion in stimulus. 19 of it government deficits that go straight in the economy, and the other 8 million of it went straight into the financial markets. They buy bonds and push all finance. That's more money chasing all financial assets, and it always ends up in the best ones, real estate and stocks. It doesn't sit in government bonds, which people buy. So there's this overreaction to COVID. I was saying, what's wrong with governments? COVID is a natural disaster. It's just like the influenza that happened 1918 to 20. It hit for 2 years. Everybody got it. Then it went away. They, out of the 27 trillion I've talked about in stimulus in the last 15 years, 11 of it came in the 2 years after COVID. So it was this overreaction to COVID. It took inflation that, right with my indicators long-term, going down towards 1 to 2%, never to be high again, and shot it up to 9%. And then that forced the Fed to raise interest rates 525 basis points. And right now, I'm looking at this and saying, we haven't really felt that much yet. Usually that's a year and a half lag. My theory is, since we had such a giant magnitude of stimulus, especially after COVID, and such a giant tightening, that it may be taking more like 2 years for these to filter in. And so we're not going to know how much this tightening, which is already done, they already went to 520, even if they started loosening in September, which is the earliest anybody thinks, and that'll probably just be 50 basis points, not much out of the 525. This tightening keeps hitting for a year and a half to 2 years after this. So this is going to show why the Federal Reserve and central banks around the world, including Mario Draghi and all the ECB people over in Europe, shouldn't be manipulating the economy. What's free market capitalism? The markets are a bottom-up system that work way better than top-down bureaucracies and dictatorships and everything else that's been tried in history. That was the greatest innovation in history. Democracy, broad participation of people, and free markets, which really rewards innovation. People think, oh, democracy and capitalism are brothers and sisters. No, they're opposite. One rewards innovation strongly. The other one includes everybody, even if you don't contribute much. And that allows people to, identify with the system and support it. It's the best marriage, like male and female in history. So what we're doing now is, since 2008, democracy's been weakening for a long time, a lot of ways, special interest and all this stuff and lobbying. But free market capitalism got attacked 100% by central banks starting in early 2009. And I call that the greatest crime in history. This is what has made us rich. And now academic people, do you know anybody in any central bank, any head of any central bank in the world that's ever had sex or run a business, or looks like they ever had sex or actually run a business? And the answer is probably no. These people are dictating economies, playing with the money supply, and it's dangerous because of these giant lags. And everybody's saying, oh, the tightening didn't matter that much. Oh, wait another 6 or 12 months. We won't know until early to mid 2025 how much it hits. And I think by then, even with a little easing, it's going to be worse than people think. Why? The greatest debt bubble in history. I cannot compare this bubble period to the Roaring 20s or the 1820s and 30s, which is the other great bubble period of the 1800s, or the one from Civil War into the 1870s, which came to the long depression over 20 years, okay? I can't even compare it to those because this bubble has been longer and bigger. And again, the first bubble was natural. Just 25 to 29 bubble inside. It was natural. The economy was so good. Inflation was falling for natural reasons, and people just get giddy and things end up in a bubble, okay? No, this is the second bubble, and two bubbles which started in 95 and are peaking here, it looks like, in 2024. This is the longest, greatest, and only double bubble period in all of modern history. And all I can tell you, since there's no precedent for a bubble this big and this global, it's not going to end well. And everybody says a soft landing. There hasn't been one bubble short. Even the tulip bubble, it was 2 years up and 1 year down, but the landing was down 98, 99%. That was the first modern bubble, and the steepest and fastest, only driven by the rich. Only richest people were speculating in these tulip bulbs and stupid stuff, driving up a $2 tulip bulb to $1,000. That's kind of what happened in reality. That bubble burst 98% in 1 year. So this can only end badly, and this is not a U.S. bubble. It's a bubble in everything. And the Japanese, it hit them first. Their stocks peaked in late '89 and only went to new highs 35 years later recently, and that's about to crash bigger than they've ever seen. And their housing peaked in '91 and have never seen and will never see new highs again. So real estate goes down longer and comes back slower because the real estate is demographic and it's local. Stocks are global. I don't care how bad we get hit in this crash. Even if the U.S. is slower to come back, particularly because of the real estate markets and stuff. Stocks are global and they'll come back with the world. And the world will come back, especially emerging markets and some of the places that have stronger demographics than us. And of course, Japan has continued to lose no matter what happens, because Japan was the first developed country to peak in their demographic trends long term, and everybody else is following. China is now the first and already has peaked in their demographic trends. Emerging country, and all emerging countries will follow, but it'll take decades for many. I mean, India won't peak until 2055 demographic. In Southeast Asia, 2045. So there's tons of growth in the emerging world and all of that. But for all the developed countries, U.S. is plateauing between 2007 and 37. And again, I am saying that when real estate crashes this time more than last time, only back to 2012 lows, which doesn't sound that much, but it is 60% now for the average house, 70, 80% for the typical upscale house. We will never see real estate prices at those highs in any of our lifetimes, and probably not even our kids.